Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to discuss some of the ins and outs that I look at as you approach a given earnings trade. So earnings season is starting to wind down, but there are still a few that are waiting to report, and there's definitely still some opportunity in them. Where do you go to try and find that? And in the case of this video, when you have multiple results, how do you start to narrow down the results that you would like to look at? Well, the ones that I wanted to discuss with you today, the first of which is TJ Maxx. So all of these are either set to report after the close today or before tomorrow's open, which means that we need to start getting positioned for them prior to Monday's close to have some exposure to it. Now, when I look at TJX, this is something that typically I would not want to trade this around earnings because it does not have a weekly series of options. This week tends to be kind of unique because you still have earnings, but you're doing it inside of a monthly expiration, which gives you the quicker decay, similar to what you'd like to see from your weeklies with only 4 days of life left. So that's a step in the right direction. As far as implied volatility goes, this also looks pretty decent. We'd like to see that there's twice this front month implied volatility as there is the back month, and that fits in very nicely. The next thing that I like to look at is what do you have in the way of open interest and implied volatility. This ticker is not terrible in relation to that because you can see that there has been some activity here. The ultimate reason of why I am going to avoid TJ Maxx is simply because I do not feel like I have an edge in getting long this. Now, there will be plenty of contrast to this idea, and there will be some people that look at this and say, well, it's been an excellent run up into this move, I don't mind being long it still. But regardless of where we stand in a ticker, I'm always thinking of what a pullback to the 21 EMA would be like, and it doesn't matter if it's earnings or whatever it else may be, I just try to be cautious within that way of thinking. So TJX is a little bit extended for me, and I'm not quite as crazy about getting long that one here. Another that we wanted to look at into tomorrow is here with VIPS. So with this ticker, this is one, now that this is updated, but this is another ticker where I find it is very difficult to want to start getting long these in relationship to where you stand to that 21 EMA. I just don't like playing tickers that I feel have already made their advance into earnings, because then it, in my mind, it just makes it a little bit more difficult to continue that ascent. Also, when I look at this chart of VIPS, you can see that we have made a major extension of a previous high to low swing, and then using the voodoo lines, which are also a very helpful method of technical analysis, you can see that it's not that far overhead that we're going to run into resistance. So I'm not that crazy about fading it because I want to try and work with that immediate trend, but knowing that my targets are just, a very short ways overhead, it doesn't give me a lot of room to work. Now that's what I saw in the two of these. When we get into the third one, this is where hopefully this will become a bit more clear. And looking at Home Depot, there's a lot of things that make this chart a bit more attractive to me. One, we have not exceeded that previous swing high at 139, so that gives us kind of a target to shoot for. We have a daily squeeze in play. And, generally speaking, this one carries pretty decent volume in the options, so I have plenty of room to try and get positioned. The implied volatility isn't quite as high as I would like to see, but primarily the thing that leads me towards getting this one, as opposed to those other two, are that you have a little bit better volume, and that you have a ticker that is a little bit closer to its 21 EMA or its mean price, as opposed to already having made a new high. So in relation to that, that's the ticker that I'm going to be looking to play. I think the most straightforward way to play this is to sell a put spread, and then you could also look to buy a butterfly around 140. Those are a couple of the strategies that we'll be working here into the end of the day today, and that we'll be sharing in the chat. Hopefully if you find those helpful, you can apply it to your future earning strategies, and they will help you down the line. One last thing I wanted to make sure you were aware of is that tomorrow evening, Chris will be going over the first part of his course on unusual options activity. That will be getting started on Tuesday from 6 to 8 Central Time. So if you'd like to check that out, you'll have the opportunity to pick that up at the end of this video, and I hope to see you there.